Hello everyone, welcome to this insurance education channel. My name is Raymond Macmillan, and in today's video we'll be talking about the insurance policy. A policy of insurance can either be a policy of indemnity or a policy of benefit. Well, what's a policy of indemnity? Indemnity being one of the fundamental principles of insurance, it says if we have an item insured and it is destroyed, you're supposed to be able to recover the exact amount of the value of the property just before the loss. And if you have a situation, let's take a private dwelling house. If the husband has the house insured via his, let's say, group scheme at his company, and the wife, unknown to him, insures the house separately, if the house should be destroyed totally, the payment to the couple would be one sum, which is the value of the property at the time of the loss, not 100% from one source and 100% from the other. It goes against the fundamental principle of insurance called indemnity. It means you can only recover the value of the property immediately before the loss. Now, let's consider a policy of benefit. And a policy of benefit are usually long-term insurances like life insurance, personal accident insurance. Take, for example, a personal accident insurance policy. If you have a policy insured with insurer A for 100,000, insurer B 200,000, insurer C 300,000, should there be an incident where you lose a limb, and according to each of the policy documents, you're entitled to a 25% of the value of the policy. It means that all three insurers would each pay you 25%. To some people that would look like you are being overcompensated. But no, when it comes to a person's life, there is no value you can put to the person's life. That's why they could recover from each of the policies that they had in place for that loss, right? That's the key difference between a policy of benefit, which really relates to life insurance and personal accident and health policies, as against general insurance, which is subject to the principle of indemnity, for example, the property which can deteriorate, etc. And at the time of the loss, you get the exact amount what it is valued for at that time, right? I know there are some folks who, if they buy a new vehicle, they would wonder, well, why can't I get the value of the new vehicle if it is lost? No. If the vehicle is 2 years old, you would get what the value of it after 2 years being used is. I hope this is helpful to at least one person. Some good news. In my next video, I'll be talking some more about life insurance, or we call it long-term insurance, as against general insurance, which is usually short-term. Look out for my next video. If you like what you've just heard, please press the like button. And how about the subscribe button below? Would you subscribe to our channel? And if you'd like to be first to receive my notification of my next video, please click the notification bell above. Thank you for listening, ladies and gentlemen.